Welcome to the Creating Wealth Podcast, where Kyle Curtin takes you on an extraordinary journey alongside renowned multifamily real estate sponsors and syndication experts from every corner of the United States. We teach you how to harness the power of passive real estate investing and witness the transformation of your wealth building strategy. Let's create wealth together.
Hello, ladies and gentlemen. This is Kyle Curtin. Happy freaking Wednesday, and welcome to this week's short episode of the Creating Wealth Podcast. So today, I wanted to talk about the top 7 things that you should know before you invest passively in a syndication about a market. So, as you guys know, whether you're in the large multifamily space or not, there are lots and lots of markets around the US, and dozens of them are talked about very, very often on, places like Biggerpockets, throughout the media, throughout the news, as essentially like hubs for investing, And how do you know exactly like where to invest your money and, how to pick a market? Or if you're looking to invest passively, how do you know if you like the market that the sponsors are operating in? There's a lot of different questions to ask, and I put together some of them here. Some of the top ones to keep in mind while you're on your travels, to always be cognizant of before you wire over $50,000, $100,000 to invest in that syndication. It's absolutely crucial that you need to be educated about the market. The deal is the deal. The numbers are the numbers. The team is the team. But you need to know what the hell is going on in the market before you do anything. So to kind of jump right in, number one is look at what the top economic drivers are for the market and the top employers. So I heard a phrase recently, and I'm going to butcher it. But basically try, and by the way, guys, this is all opinion, but take it with a grain of salt. Some folks are more, risk cognizant than others, but take these things into account when you, kind of do your own analysis and figure out what, kind of you're satisfied with, in terms of doing due diligence on these markets before you pick some of the ones that you like, before you invest. So the economic drivers and the top employers, try not to pick markets that only have like one giant employer in them, because you never know, when certain things can happen and, the employer goes across the country or they pull out of the market, or you never know, you know what I mean? And if that's your one true source of, basically like a large tenant pool, then you might have a problem when it comes to occupancy. If, in a really crazy black swan event, they decide to take off out of the market and now you're left holding the bag. And I say this especially when it comes to larger multifamily properties, and probably more for investors. Like, this is something that comes to mind when there's a deal presented in front of me, is who is in the market, you know what I mean? And I know for, one of the markets that we really like in Western Mass, Springfield, there's like Mass Mutual. It's a very, very large insurance company. Bay State Medical Center, General Dynamics is a government, company out there. Those are thousands and thousands and thousands of jobs out there in that one city. So, and obviously, there are a bunch of other smaller ones as well, but those are some of the ones, Mass Mutual especially being an absolutely ginormous one with thousands and thousands of jobs. These are things that you want to just be aware of. You know what I mean? Number two, and it kind of blends in with number one, is what are the top industries? So you want to really have a good gauge on, especially if there's diversity when it comes to industry, so if like there's not just pretty much one particular industry in that market across a couple companies, large companies. The more the merrier, you know. Basically, like, diversity is kind of what I'm preaching here right now. And, you know, basically just having a lot of different sources of, solid tenants that in, the event that one of these employers, multiple of these employers, industries change for XYZ reason. You guys saw how COVID was and how that impacted some industries. Total black swan event that couldn't have ever been, like, predicted or anything like that. You never know. You know what I mean? So that is number 2. Number 3, pay attention to crime. And before I actually continue any further, I wanted to give you guys a couple resources to kind of get you started on doing some of this research. These are completely free resources, at least the way that I use them. You don't need to make an account or anything. You can just go right to the websites and do some homework. I have 4 of them right here. And those being, sorry, I just had one pop into my mind as soon as I started to mention that, are citydata.com, census.gov, usa.com, and neighborhoodscout.com. Neighborhood Scout, there is a good amount of it that you have to pay for, but you are able to tell some crime statistics, just by pulling up the market on the internet and going to the website and checking it out. You do, kind of get a gauge and a kind of like a shaded map, for different particular sections of a market. And these are things that are really good to know, good to have in the back of your mind, especially if there's a deal that you're looking at potentially doing. You want to, have a good idea of kind of what you're getting into. And I mean, there's a different topic that I'll talk about in another video about, making sure that the property manager is equipped to take on a project, that's D class, C class, whatever. And, not trying to place like an A class property manager in a C class asset and expecting them to just figure it out and everything be hunky dory. But that's a different video. I'm not going to get distracted. Yeah, so the next one, guys, to be aware of is the unemployment statistics. So you should be able to, throughout these websites, find, trends over the past 5, 10, 20 years on what direction unemployment is going, and the current stats that it's at right now. You can actually tell from a few of these websites extremely well, what that particular situation looks like in that market, all the way boiled down to, the particular demographic, like male, female, like there's like age and stuff like that in there. There's a lot that you can tell about a market, by looking at some of this data, and if there's a market that has a, decently high unemployment rate, oftentimes as well, you can compare this stuff to the United States or Massachusetts as a whole, that data, and kind of see how it sizes up. Yeah, you can tell a lot about what's going on, in the market. The other thing to mention, along a similar vein with that one, is what does it look like as far as the low income, like assistant program, type of population, because it might drastically change the strategy. I mean, I know in, some of the markets that are in Central Mass, Western Mass, there is a, pretty fair amount of, government assistance programs. And there are a fair amount of folks that are on those as well, so that's definitely something to keep in mind. I mean, a lot of state agencies pay on the first, but basically there's more red tape to take care of with that. And you just want to be aware of, as well as questioning the sponsors on deals, if they, are aware of what those statistics look like. Are they looking to integrate, that type of strategy into their asset stabilization? Do the market rents fit, like, basically the, HUD.gov rent, fair market rents and stuff like that? These are things that you really want to have a good gauge on. Another very big metric that's pretty versatile across the US is population growth. Um, Population growth, you should be able to pull up trends for a pretty solid trailing trends rather from a pretty solid amount of time in the past to get a gauge on like, hey, are people generally leaving this market or are people generally coming to this market? And what's the pace at which, people are doing either or? If you can tell that there's like, 10% of a market is positively growing and people are really coming in, say the state average is like 3%, 5%, I forget what it is for Massachusetts. That's pretty friggin' awesome. But if that's the inverse, now you might want to start asking some questions, because these are some things that can, affect vacancy and leasing up units in especially some of these larger assets, guys. Basically, like, finding out as much data as you can about a market before you make any type of investing decision is key. The next one is job growth. That's, I kind of group that in with population growth as well. If you're catching a positive trend for that, friggin' awesome. The market's developing. There's a lot more action going on in terms of economic development. Things are great. If jobs are not increasing, might be asking some questions. And then the last one is the path of progress and the master plan. So I usually like to crack a joke about insider trading with the stock market and how drastically illegal it is. But it's kind of funny because when it comes to real estate, these markets will basically give you insider information right on their, town websites, as far as like what the market's working on, what part of the market they're focusing their efforts, physically, like what's their plan over the next X amount of years that they've been working on, like what are they trying to develop. They give you all the freaking information. And some websites for some markets, it's you have to dig a little bit more than others. I know for Worcester, Massachusetts, you can physically pull up the map on their like the town's website and literally see, like, there's I'll never forget it. I first saw it a few years ago. You can literally pull up a PDF of their master plan, and there's literally like a triangle, like an outlines, like, triangle, like wedge, I guess you could say, across a particular section of the market. And they're like, hey, like, we're literally focusing our efforts like right freaking here, and they give you a lot of data to be able to, I mean, because in a sense, guys, like, if you're investing in types of projects, especially that are, following the town's master plan and helping develop the market, stabilizing these assets, helping it become a better place, for its residents as well, it's probably going to work out in your favor, for everybody's favor. So these are some of the things. I know this one's going to be kind of quick, but these are definitely some of the things to keep in mind. Especially when a deal from, myself or other sponsors come out, or even, like JVing on deals or just doing deals in general. But I focus it more on like the larger multifamily stuff, where, a lot of these other external factors within the marketplace are a bit more impactful on these larger assets, in regards to vacancy and leasing and that type of thing, and actually achieving market rents that are forecasted, before the deal's even closed. These are all things that I highly recommend doing as an LP, just to have an idea, and see how it sizes up with what the GPs put together. If you're a GP, these are awesome things that you probably, want to have the answers to when people ask when you present a deal. Because yeah, I mean, basically, like, the more information that you have, the better off you are. In my opinion, it's basically, kind of like an insurance policy. You did a lot of homework, you're cutting down your risk, or are becoming aware of potential items that could be a risk that, may raise concern, that may not. And yeah, It's like, don't just, hope for the best that Springfield, Mass is okay, that Worcester is okay, that Nashua, New Hampshire is okay. Like, you want to have a gauge on what the hell is going on in these places before you put any money anywhere, And who knows, like, these items, you may discover that some of the markets that, after doing this, little exercise and doing some digging on some of these markets, you might realize that, you really don't like what the hell's going on, and you would rather be in a market that's a bit more bullish, maybe, lower returns or, whatever, but, or, the opposite. You might like, a bit more of a opportunistic or like a value add component, maybe like a D, C class market, try to bring it up to like a C plus or a B minus, something like that. You never know. You know what I mean? So I would say, take the data that I gave to you guys today, in regards to some of this different information, and start to go through some of the markets of, some of these GPs deals, and just see what you find. You know what I mean? You always want to be aware of all of these items, no matter the side of the table that you're on, before you invest a single dollar with anyone. You want to just know what the hell you're getting into. You know what I mean? But I actually, you know what I'm going to do? I am going to put a checklist together, and I'm going to put it in the description, for you guys to basically have all these items on one sheet, to be able to go through different markets and that kind of thing. I might do it. I'll probably have it so like it gets emailed to you or something like that. Like, just drop your email down below and I'll have it sent to you. But yeah, if you want it, definitely, check in the description as well, guys. I mean, if you ever have questions on any of this stuff, like, feel free to shoot me an email. That's Kyle@creatingwealth.com. That's KYLE@KCREatingwealth.com. Follow me on Facebook at Kyle Curtin, Creating Wealth, whatever. Yeah, feel free to reach out with any questions or anything, guys. I'm more than happy to go through this stuff with you, or, talk about different markets with you, things that I like, things that I, maybe don't really like. Yeah. If you could, please leave a rating and a review on this episode. Share it with your friends, especially folks who might be outside the real estate industry and looking to invest passively. If that's your case and you want to talk more about some of these items and, why I'm very bullish in some of these, for certain answers for, parts of these items versus others, reach out. Alrighty, my friends. That is all for now. I hope you have an absolutely fantastic Wednesday. I hope this is going to be helpful for some of you guys. And yeah, I hope you have a fantastic rest of the day. Alrighty, goodbye.
That's a wrap for today's episode. We want to thank you for being a valued listener of the Creating Wealth Podcast. Make sure to visit www.creatingwealth.com to connect with us. Dive into our ever-expanding library of informative blogs. Get access to our private investor portal and explore a wide range of additional valuable resources. Stay tuned for our next episode as we continue to create wealth together.